It's not just stocks that have rallied as the Federal Reserve considers more help for the economy, possibly announcing it as soon as later this week. Gold prices have also jumped more than 4%, in fact, since the beginning of this month. Gold continues trading over $1,700 an ounce tonight, settling near its highest price since March. George Giro is the Vice President of Global Futures at RBC Capital Markets with us tonight at the NASDAQ. George, has gold gotten ahead of itself, moving more than $70 an ounce since Labor Day?
Not really. Actually, it's up 10% for the year to date, while, of course, other markets are up 15%. So actually, gold has maintained itself. I don't think it's gotten ahead of itself, but it's gotten an awful lot more investors interested just this month, ahead of the FOMC meeting and ahead of other developments in Europe, including a German High Court ruling.
Yeah, we have seen an increase in trading volume. We've seen an increase in what's called open interest of gold futures, essentially positions that are kept after a closing bell, after a settlement, considered really long investors here. Are these characteristics potentially early signs of a bubble in gold?
Oh, I don't think it's a bubble. I think the people who've been buying gold have noticed other commodities, especially the grains, moving up to very high prices because of the drought worldwide. And it looks like between currency fluctuations, the interest rates maintaining themselves low, that means the weaker dollar. And of course, with a possible downgrade from Moody's, if there's no progress in Congress and the Senate, well, then of course people who own gold will maintain their gold positions.
All right. Well, how about that? If you do own gold at these levels and you've got some profits, do you sell in anticipation, perhaps, of a lot of headline risk this week with the Federal Reserve announcement expected on Thursday?
I think traders may sell if there's disappointment, but long-term holders, people who live in Italy, Greece, Portugal, or even Argentina, who need gold to maintain purchasing power and worried about their own currencies, are going to continue to invest in gold.
What about it for Americans, do you think? If there's a risk that the Federal Reserve wouldn't do enough or won't do it fast enough later this week, is there a risk to this gold rally we've seen as of late?
Yes, there is, because all the funds have piled in just this month. You've gone from 386,000 to 456,000 in open interest that we mentioned earlier. That means a lot of recent buyers, and they could be worried. And if they're worried, they could sell very quickly, getting a downdraft in gold prices.
And do you open positions perhaps on that downdraft, buy on the dip?
Yes, every time you've had a major dip because of some headline problems, you've seen that gold has rebounded, and in the long term, gold has been a good thing to own on big dips.
It has been resilient, no doubt about it. George Giro with us with RBC Capital Markets.